Most of us understand the baseline of financial responsibility. We buy health insurance to cover our medical bills, car insurance to drive legally, and homeowners insurance to protect our property. But consider a highly practical, uncomfortable scenario. If an illness or injury kept you entirely out of work for 6 months, how would you pay your rent, buy groceries, and cover your utilities? Ask someone this, and the most common response is a vague assumption that they would simply figure it out somehow. This diagram traces a standard working timeline from age 20 to typical retirement age. This breaks the figure-it-out mentality. Over a quarter of 20-year-olds face a disability keeping them out of work for a year. These rarely stem from workplace accidents, but rather weekend car crashes, slipped discs, illnesses, or mental crises. Disability is a common, everyday risk. Because we misjudge how often it happens, it remains a glaring financial vulnerability that most people haven't even begun to address. So why do otherwise responsible people systematically ignore the exact safety net they are most likely to need? It starts with a behavioral quirk known as optimism bias. Our brains are biologically wired to process devastating statistics as things that only happen to other people. We maintain a firm belief in our own immunity, which prevents us from acting until a crisis actually hits. Compounding that biological blind spot is a major systemic illusion, the assumption that workers' compensation acts as a universal safety net. Look at this coverage map comparing your total 168-hour week against the fraction of time you actually spend at your job. Workers' compensation strictly applies to injuries that happen inside those specific working hours, and only if the injury is directly related to your job. It offers no protection for a Saturday accident or an illness unrelated to your workplace. Most people only discover the scale of this gap at the exact moment they are trying to file a claim and getting denied. When you combine our natural psychological wiring with confusing systemic terminology, it creates a dangerous false sense of invincibility. The final illusion is the tendency to default to doing nothing. The private insurance market is complex, so most people assume their employer is already handling the problem. This chart tracks a standard salary over a 12-month period. If you rely entirely on an employer's short-term disability plan, your income immediately drops to between 40 and 60% of your normal paycheck, and usually that partial coverage abruptly terminates after just a few months. When a disability outlasts that brief window, a severe crisis triggers. The household is left managing standard living expenses, but the income stream drops to zero. Years of savings vanish. Retirement accounts are drained early, triggering massive tax penalties on top of the initial loss. Often, family members are forced to reduce their own work hours to provide care, dropping the household's remaining income even further. An unmitigated disability is more than a temporary medical event. It is a financial cascade that alters a household's economic trajectory for years after the injury heals. Contrast that potential financial loss against the cost of private insurance for a young, healthy worker, and the imbalance is striking. This scale compares your total annual livelihood against the price of protecting it. Securing a private long-term disability policy typically costs between 1% and 3% of your annual income. For someone earning $60,000 a year, that is roughly the cost of one weekly coffee and a single streaming subscription. To act on this, start by checking your employee benefits portal today. Look specifically for the percentage of your salary that is replaced and the exact month that coverage stops. If you are self-employed or your employer coverage is minimal, look into a private long-term policy now. Premiums are permanently locked in based on your age and health at the time you apply, meaning waiting only makes the protection more expensive. Confronting the reality of disability forces an uncomfortable acknowledgement of our own vulnerability, but facing that brief discomfort is the only way to ensure you aren't left exposed at the exact moment you are least able to fight back.